Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to check in on the broader markets. We have Netflix and Tesla earnings going on right now after hours. We'll see how those are settling in. And we'll go over how today was the ideal bear day compared to yesterday, which was the least ideal kind of bear day that you can have. And we'll go over the differences.
All right, so yesterday was a red day and today was a red day, and they're really good back-to-back examples of yesterday being the least ideal bear day with rotation going on, a few of the big names dropping, but seeing strength in growth names and elsewhere in the market. And today was an ideal bear day where you had money leaving the market. You had everything dropping together. I think pretty much the energy sector was the only thing green, and advanced decliners, which shows you the percentage of stocks that are red versus green. And just for the NYSE here, it was 80% red and 18% green. So shows a significant amount of weakness. And again, we had all major sectors hitting the lows at the same time. And that's an ideal bear scenario. And so what this does is it shifts the probabilities further towards weekly lower highs being set. And we know the S&P 500 futures rejected from daily resistance yesterday, trying to confirm the uptrend, and now we just broke daily support. And so just like that, the S&P 500 futures is shaping up the weekly lower high. Now after hours, we do have Netflix and Tesla earnings that are both positive at the moment, but their weight in the NASDAQ and the S&P 500 is not moving the needle a whole lot right now. We can see SPY after hours currently up 70 cents. So, we got a 15-minute bounce going on essentially. And QQQ after hours up a bit more because Tesla impacts the NASDAQ a bit more. But again, it's not moving the needle right now. And so the NASDAQ had our 4-hour tightening equilibrium break bear. We had our high, low, lower high, double bottom, lower high. And this morning we set a higher low and quickly erased that. And so what it was this morning we had a battle going on, a triple bottom at the low of the day, a quadruple bottom at the low of pre-market, and the bulls won that battle. We were chopping around new high of the day. And to go from a new high of the day straight into a low, red flag. That is not what you want to see. That needs to be the low of the day. That needs to be the 4-hour higher low. And the bulls need to then control from there and keep tightening up. And so to quickly turn around like that, it's like, well, is that the 4-hour lower high already being set? And now in hindsight, yeah, we ended up dropping down and breaking to the lowest level in the last few days. So we had a 3-day tightening range that has now broken bear. That said, so we have a very different view of the NASDAQ and the S&P 500. Again, big win for the bears, not going to take that away from them. Daily downtrend on SPY. One of the big questions this week was, can the bulls confirm the daily uptrend and join the NASDAQ? QQQ did it, XLV did it, XLF did it. SPY didn't do it. Or I should say the S&P 500 futures chart did not do it. So there's a clear wall in the sand. If we don't get over that resistance level, the bears don't have anything to worry about. If I'm a swing trading bear looking longer term, that's now a key level for me, because I'm making bets that that's the weekly lower high. The NASDAQ, technically speaking, still has space for a daily higher low here. It wasn't the quick higher low into continuation that the bulls wanted to see, but we're also making note that, we shot up after a 4-day bull move, and now we've been consolidating for 5 days, and yes, we've given back over half of that move, but we are still looking for a daily higher low. So it's not quite the same in terms of the S&P 500 confirming a daily downtrend, and the NASDAQ is still looking for a daily higher low. And so what the NASDAQ bulls are going to be hoping for is that this is a bear break with no follow through to try and shape up a falling wedge. And I'm not going to put a lot of conviction into this pattern, but I draw my lines and I watch for it. I watch for this to be a possibility, depending on what we see tomorrow in response to the other names that are anticipating their earnings yet to come. And we know really what's going to impact the NASDAQ and the broader market: Microsoft, Apple, Google, Meta. Those are the earnings that are going to be a lot more impactful. So we'll see. If we have a green day tomorrow, definitely going to be watching for this potential 4-hour falling wedge to try and shape up a daily higher low in the NASDAQ. But again, right now, the bears have some momentum in their favor, and it is the bulls that have the proving to do. So Tesla, big bear day. And again, we're a little bit green after hours, but we're still not even close to the high of the day. So again, it's not really meaningful. Right now we're trading where we were at a couple hours ago. So overall, the good news is we're remaining in this weekly equilibrium. That's great. Give us just a pure technical break having nothing to do with, a fundamental coin flip. That's exactly what I want to see. Bulls are going to try and shape up a higher low compared to 234, and maybe the earnings here are a catalyst to do so. We'll see what the trading does tomorrow, but the burden is on bulls to prove to us. We can even go to the 2-day time frame and just look at the equilibrium from there. Burden's on bulls to prove to us that this is a higher low compared to that level, and we'll see if we keep tightening up into next week. Semiconductors, weekly lower high is set. The only two paths from here: bulls confirm an inverse head and shoulders for a monthly bull flag. Bears break weekly support for a continued downtrend. Daily time frame, it's a straight drop. The bears do still need to confirm a daily downtrend. So as a result of the next bounce, there's a lot of space for a daily lower high. We're going to watch the next bounce retracement when that shapes up. And then the bears want to confirm that daily downtrend to make their way back to the recent low. NVDA off a cliff the last few days, same deal. It's a potential weekly head and shoulders. If we break 409, it's 403. I mean, it's 400 psychological. We've got 3 lows just above 400. And so the goal for the bears is to break 400. If you don't break 400, you don't get the win here, just as far as the bigger picture macro setup for NVDA. But same deal. We're, a free fall, waterfall drop. We've now dropped over 5%. And we know that the bears must confirm, whenever we bounce from here, we must confirm the daily downtrend for follow through. So I would expect bulls are going to attempt to defend support, at least initially. And it's got to be that downtrend to try and take out 400. So you're going to be watching that closely. Semiconductors led the way up. Bears want to see them start to lead the way down. Healthcare. So one thing that I've been focusing on, a couple things I've been focusing on in the markets, and again, there's always something new as a trader. Like 4 years ago, for me, it was wedges. I started getting real good at wedges. And now I'm watching flags that confirm with no follow through to look for reversals. We've talked about those a lot recently. And now a new one, 4-hour rising wedges in stocks and ETFs to set weekly lower highs. And if you've been following along, we were watching a Microsoft 4-hour rising wedge to set the last weekly lower high, and that played out really well. I'm going to be drawing these sloppily, but that was a beautiful Microsoft weekly lower high. Meta did it as well. This was the Meta 4-hour rising wedge for the weekly lower high. Ignore these lines. And so now we're watching for it in other places because weekly lower highs are the most likely scenario in a bunch of places. And so one place I'm watching it for is the healthcare sector. I drew these this morning during the live stream and pretty much talked about this. And so now we're breaking it bare. XLV confirmed the daily uptrend with 0 follow through. If we hold support of 129.28, the bears are going to hope that that is a, what is going on? Bears are going to hope that that's a head and shoulders if we hold support. But again, you look at the weekly candle and we are closing in on the potential of that weekly lower high being set. And so I'm watching for the possibility of this head and shoulders. If we hold 128, let's go to the regular trading hours level. If we hold 129.28 support, the financial sector is the same thing. So we know the weekly lower high is most likely. This is a sloppy 4-hour rising wedge, but same mindset because we kept talking about, I should say, we talked about how we kept hitting the high into a pullback. High into a pullback, high into a pullback, high into a pullback, and today we rolled over. I'm not sure if I talked about my bearish XLF swing in yesterday's video. I don't like talking about trades in hindsight, but I exited half of that on this weakness. And same thing, if we hold daily support of 32.91, the bears will then have to make it a head and shoulders to convincingly set that weekly lower high. So a couple daily supports approaching for XLF and XLV. and we'll see if they hold. If they do, we keep an eye out for the head and shoulders. IWM, daily equilibrium continues to tighten. Lower high is now set. So I'm just viewing this as a high, low, lower high, higher low, lower high, and we're heading back down towards 169.69 support. Burdens on bulls. The bears don't have anything to worry about as long as every bounce keeps forming a lower high. And so knocking on the door, and it was growth names leading the way down today after leading the way up yesterday. ARKK, daily lower high, and now a lower low. Week close, lowest level that ARKK has seen in 4+ months. So growth bears still in control. AI did a good job holding on. I mean, I would have, if you show me today's trading, I would have expected AI to be down, near the lows of yesterday. So I'm pleased with that daily inside bar. But again, it was clearly a big bear win. Right now, Tesla's back to break even. So again, Tesla's pretty much a premium killer for options. Anybody that bought puts or bought calls is going to get whacked tomorrow. It's the options sellers. So MSOS. So very odd day today. We had the bull break yesterday and selling into that strength partially. Sold 10% yesterday. Sold another 25% today. Into the strength. Again, up near the high of the day. And that's just knowing the weekly lower high is the most likely scenario. And this name likes to break the hearts of bulls. That's from watching it. And this is just another kick in the teeth where it's very unusual trading going on. What's unusual about it? The percentage range on the day was 13% plus. That's one of the most volatile days of this entire thing. I mean, we had the very volatile initial news reaction days. But once the first 4 days of that news reaction settled in, this is the highest volatility day percentage-wise. I mean, even the gap up sell-off wasn't this wide of a percentage range. And look at the volume. It's the highest daily volume in terms of share count that we've seen since that top. We saw more shares traded today than on the day when we had a safe news vote. We had a pump and a dump as a result of that. And we had a ton of retail activity. And when you get headlines, you get retail activity. There's no meaningful headlines today. So to me, this is big money. There's rumors, a fund blowing up and being liquidated and forced selling their liquidations. I have no idea. I don't even care about speculating. What I do know is that's a weekly bear flag that is on the verge of very quickly confirming, and it is a big red flag for bulls. There's tons of space for an hourly lower high to be the result of the next bounce, and I'm on the verge of exiting my swing. So what started is looking like, oh, this is a great entry. I sell maybe 35-40% of my position in profit from my roughly $7 break even. And so now my break even is, closer to 660, 670 or whatever. So I'm comfortable, but, it's looking like, well, I'm going to stop out break even, and that's going to be a waste of time. But that's the way it goes. And so the bears are pretty close to taking right back over here. But a big win for the bears in the cannabis space today. And the Canadian names just continue to collapse. CGC falling apart, down 14% today. Again, it's just, if we could just go back and learn from it, right? This has happened so many times, which is why when this was happening, I was able to make the videos, watch for the lower high if we confirm the daily downtrend, watch the fade, dilution, death spiral, yada, yada. And, I would so much rather be wrong. I would so much rather be wrong and have the clueless retail people that bought into that pump make money than to be right and have everybody lose money. But it's just the same old story time and time again. It's just history repeats itself so often in stocks. And this sector is just a shining example. And it's a lesson in psychology. I mean, I could talk for 3 hours about it, just in terms of, everybody's mindset. This time it's different. We've got the headlines. Everything's shifting. We're going to the moon. And it's just not. And to see that change, you have to confirm uptrends. And to see the pump give it back without seeing the continuation is your red flag. Uranium name CCJ trying to break daily resistance. It's now a triple or quadruple top, trying to set the weekly higher low. Not convincingly doing so, but definitely still within striking distance, fighting that resistance. Talked about ARKK. The dollar, daily higher low set. So this, I'm treating this as a little mini equilibrium, but this is bulls negating the head and shoulders right now. Again, when's the last time the dollar has confirmed a daily downtrend? It has not happened on this entire move. And if it doesn't happen, it's a weekly bull flag. And the 10-year is already doing it. Weekly bull flag confirmed. Never confirmed the downtrend. Nice drop. Prove it, bears. Confirm the downtrend. Nope. Weekly higher high and TLT at the lows. I know everybody wants to nail the TLT bottom. We have not confirmed a clear daily uptrend in months. That's baby step one. I'm not even going to talk about a TLT bottom until we have a confirmed daily uptrend. Oil, another name where we're scouting a weekly lower high and we're watching for the potential of a 4-hour rising wedge. And over the next 2 days, we're going to get a whole lot of information as to whether this is the case or not, as this continues to try and shape up. The energy sector is much stronger than oil, already back to testing the all-time high, but there is definitely a resistance zone here. 92.79 to 93 adjusted for dividends, pulled back just under that level. We're definitely a bit extended into this resistance test. 4-hour RSI is overbought. So I would expect an initial rejection or at least a bull break with no follow through if we get it. But an impressive recovery after that big old dump. And again, if we are going to see, I've been talking about this potential monthly rising wedge on the energy sector. And again, this is not high conviction for me. It's just something I'm going to glance at every few days, knowing that it's going to take months to play out if it is indeed a rising wedge. Natural gas tried to get the daily higher low set, and it did. It confirmed a 4-hour uptrend straight into a test of the low. That's a red flag. We are still holding the low, but it is a potential quick daily bear flag. And again, we just haven't seen the natural gas bulls do anything this week, and struggling still. NEE daily consolidation underway. Traded that for a short today. What else? There was one more thing. Oh, the VIX. I don't use the VIX a lot with my trading, but more and more it's telling me watch the 20 level, because this 20 psychological level just keeps coming into play. And so look at the closes here. Look at all these rejections. This pretty much solidified 20 and then a big spike over, but close right on it. Spike over, close on it. Get over it, but can't close above it. Can't close, can't close. When we start closing above 20, that will be significant for me. But for now, it keeps on rejecting it. All right. So we'll see if these earnings can save the bulls a bit. The NASDAQ potential 4-hour falling wedge. If we're red tomorrow, that's probably off the table. If we're green tomorrow, it'll stay on the table. But again, we know weekly lower highs are the most likely scenario. And after today, the probabilities that they're being set definitely shifts a bit. We'll see about those potential little head and shoulders on both XLF and XLV. I hope you had a great day. And I hope you do a good thing.